Hi, do you need good credit if you're not going to buy a house? Yes, you do. Stay tuned to find out why. Hi, I am Luna Gentil. If it's your first time on this channel, please click on the notification bell, subscribe, share this video with someone else, and give me a thumbs up. Why is credit important? We already shared with you what credit is. If you did not see that video, please go back and watch yesterday's video about credit and credit score. But credit is much more important than people think. Most of my clients in real estate, they think they need good credit when they want to buy a house. Yes, you do need good credit when you want to buy a house. Or if they're going to go for a car, they know they need good credit. But most people do not realize how credit affects your everyday life. It affects a lot of little things that people don't even think about or they are not aware of. And today we are going to go over most of the ways that your credit score and your credit report is being used. And you'd be surprised that some of them you might not even know that they existed or people were checking your credit for that. Of course, when you are buying a house, if you are financing the house, you need good credit, at least a decent credit to get a decent interest rate. That is the first thing. That is the major thing that everybody knows. If you're going to purchase a house with financing, if you need a mortgage, you need credit. Of course, if you are going to apply for credit cards, you need not necessarily good credit, but you need a decent enough credit to be approved for credit cards or better interest rate. If you want better interest rate, you want good credit. The better your credit score, the higher your credit score, the better the interest rate you will receive. Also, when you are applying for a job, most people do not even realize that because until recently, employers did not look at your credit report to decide whether or not they're going to hire you. But now it's common practice that employers look at, there's so many people looking for the same job. They look at every single criteria. And when you fill the application, you pretty much give them the right to pull your credit report and look at it. You might say, well, why does my credit impact me landing a job? If you owe everybody in the world, most likely, if somebody else give you $1 more, you might quit and go work for somebody else. So the employer is looking to see how you manage your finances, how you manage your life, to see if they are willing to invest tens of thousands of dollars training you and for you to go and work for somebody else. So they do check your credit. Not most big employers, so not every employer do that, but a lot of employers starting to check your credit report to, as part of their hiring criteria. Another way your credit is being used is when you go to get an apartment. Most apartment buildings, actually should be all apartment buildings, they require a credit report. That's the first step, is they have to see, you have to meet a minimum credit score. And then if you pass that, then they require pay stubs and bank statements, different stuff to see if you qualify for the apartment. I recently helped somebody who was looking for an apartment, and that apartment building asked a minimum of 640 credit score. That means with 640, you can get a FHA loan, you can get a government loan. That's how specific the apartment buildings are. So you do need at least a decent credit to be able to rent an apartment under your name. I have quite a few people who cannot rent anything under their name because they have bad credit. So they have to get somebody else to help them and sign the apartment, the lease under their name for them. So you don't want to be in that category where even to get an apartment, you need somebody to sign or co-sign for you. Another way your credit report is being used is when you refinance your loan. Right now is a great time to refinance your house if you have a house, because interest rates are still very low. And if you had a high interest rate, you could be saving thousands of dollars in interest every year. So it is always good to keep your credit score up, because you never know when a good opportunity will present itself and you need to use your credit. My car loan is 1.99% interest rate. And I received an email from my credit union that says, how would you like to receive a 0.99% interest loan on your car? I mean, you never know. Sometimes they just send it to you in the mail, a great offer. If your credit is not good, then you cannot take advantage of it. So I encourage you, always keep your credit score high. It's going to benefit you somehow, someday. Another way is when you're purchasing a car. Of course, the higher your credit score, the lower your interest rate would be on your car note. I just mentioned that mine is 1.99%. I have somebody else I was talking to, their interest rate on the car loan is 28.99%. I mean, I'm telling you, they are paying 14% more, 14 times more than what I'm paying every month in interest alone. So it pays to have good credit, and that's one of the ways you can save money when you have good credit. Another way is when you're getting a cell phone. Some people go get a cell phone, they ask them for down payment, and then they do monthly payment for the rest. Some people they can't even get a cell phone finance. They say you have to pay it outright. It's not because there is no deals available, it's because your credit is too bad. They don't trust that you would pay your cell phone bill. So they tell you you have to pay the cell phone outright. And for other people who have good credit, they don't ask you for no down payment on the cell phone, no security deposit, nothing. They just finance the cell phone for you because you have good credit. So even when you're getting a cell phone, if you have really bad credit, that would affect what kind of deals you can have. Of course, when you are setting up utilities in your name, if your credit is bad, they are going to want you to put money in escrow for your to open your account. A lot of my clients can actually just call when at closing, we call over the phone and set their utilities on in their name. But when they have questionable credit, they have to go to the company and put money down and give their paperwork to show that the house actually belongs to them, and they have to put maybe 200 or 500, depends on how bad the credit is. They have to put money in an escrow account just in case they default on their utility bills. The company can at least have some money put aside. So when you are opening utilities, gas, electric in your name, if they ask you for to put money down, it's either because your credit is bad or you owed before and you did not pay, you went to collections or something like that. But that also would affect your credit. So utility companies look at your credit report and at your credit score to determine whether or not you need to put money down. And the last one we'll cover is when you are getting insurance. When you are getting insurance, they also check your credit. I know you're saying that's crazy. Why are they checking my credit for insurance? Insurance has nothing to do with credit. Well, yes and no. Does it really have anything to do with credit? No. But the credit bureaus are trying to sell information, and the more they can sell, the worse your credit, they can sell it at a higher premium, because just like bad news sell, bad credit sell as well. And when they can convince the insurance industry that there is a correlation between your credit score and your rate of accident, then yeah, that's what they did. And they are selling your credit report to the insurance industry. And the reasoning for that is the worse your credit, the more people you owe and cannot pay your bills, the more distracted you are. And the more distracted you are, the more prone you are to get into an accident. So because of that, if you have bad credit, well, they start charging you a higher premium, because they said if you're going to get into an accident anyway, you are a higher risk. Because you are a higher risk, they start charging you a higher premium because they can. So those are the ways your credit report is being used. They look at your credit score to see whether or not you can get the best of deals. Um, always look at your credit report, fix your credit if it needs fixing, and keep boosting your credit score if it needs to be, if you need to work on it. If you're not in the 800s, yes, you can always boost your credit score. My credit score last time I checked was 820, and I'm still working on boosting my credit score. If you need more information about this, about what you can do, the things you can do to help your credit, go ahead, click on the link below, get a copy of my book, Credit Repair Secrets. It's going to help you, give you a lot of tips of things you can do to help yourself and better your credit. That is all we have for you today. It was a pleasure being with you. Until next time, be safe and may you prosper.